If you're thinking about buying a home this spring, you might have more negotiating power than you think right now. Inventory is growing, and new economic reports show an unexpected trend in homebuyer demand. People are done waiting and are out there buying homes. But here's one factor that could change everything. That's tariffs. Hi, it's Yasmin, your trusted mortgage broker. Let's dive into how these changes could impact affordability. After several weeks of declining mortgage rates, we've seen a slight decrease. According to this national index right here, the 30-year fixed mortgage rate is now averaging 6.81%, up from 6.83 last week. The good news is that rates are still below their peak from last year, and more lenders are offering rate buy-down options to help make homes more affordable. The wild card here is that inflation remains a factor, and upcoming economic data, including next week's Fed's meeting, will determine whether rates stay steady or move again. If you're watching rates and waiting for the perfect time, the best move is to get pre-approved now so you can lock in the best rate when the time is right. Pending home sales ticked up last week, showing that buyers are still active despite affordability concerns. Total unsold inventory is now 28% higher than this time last year, giving buyers more options. As for home prices, while demand remains steady, sellers in some markets are starting to reduce asking prices to attract buyers. What this means is that buyers now have more leverage than they did a year ago. If you're shopping for a home, you may be able to negotiate sellers' concessions, like closing cost assistance or temporary rate buy-down, and that can save you thousands. Despite rates not falling this week, total mortgage applications jumped 11% last week. Purchase applications alone increased 7% for the week and 4% year over year. That's because buyers who have been waiting don't want to miss out on current rates before competition heats up in the spring market. If you're on the fence, this wave of activity could be a sign that demand is picking up. And when demand rises, so do home prices. What's on everyone's minds are tariffs because it affects everyone. Tariffs are a tax imposed on imported goods by a government to protect domestic industries and or generate revenue. The recently implemented and delayed tariffs on imports from Canada, Mexico, and China could drive up construction costs, making new homes more expensive. What's affected is lumber, steel, and other building materials, which are already costly. These could become even pricier, pushing up new home prices. Appliances and home finishes, things like cabinets, countertop, and flooring, much of which is imported, could see price hikes, and this is how it can affect home prices. New construction homes may become more expensive, which could push more buyers to resale homes, driving prices in the existing home market. Builders may even slow down production if material costs become too high. Renovation and remodeling projects may become pricier, making it more expensive for homeowners to improve their existing homes. So that deck or kitchen remodel may have to wait. Basically, if you're considering buying, acting sooner can help you avoid future price increases caused by rising construction costs, because we don't know how long this trade war will last. When I grew up, I used to watch this futuristic cartoon called The Jetsons. I know I'm aging myself, and I can't wait for some of the inventions to become a reality. Some actually have, but here's something interesting. 3D printed homes are no longer the future. They're here. Lennar and Icon, a 3D tech company, partnered to build 100 homes in Georgetown, Texas, and 75% have already sold. These homes are built faster and at a lower cost than traditional construction, showing how new technology can increase affordable housing options in the near future. So if you're a buyer frustrated by limited inventory or high prices in your area, watch out for innovation like this to expand to a home near you. If you've owned your home for the last several years, you likely have a ton of equity, but home price growth is slowing, meaning this window of opportunity may not last forever. Many homeowners are using a cash-out refinance or a HELOC to wisely pay off high-interest debt like credit cards, invest in home improvements that add value, or purchase an investment property while inventory is rising. So if home prices begin to level off, tapping into your home's equity now could allow you access to the most value before rates worsen. To help you get into your new home, we're offering special pricing incentives for qualified home buyers. With down payment assistance, we have various programs offering between $5,000 to over $18,000 in free grants, forgivable and repayable second loans. So with 100% financing and rate buydowns, there are options to make homeownership more affordable. And we can close loans in as little as 10 days nationwide. Thanks for watching. If you need help with your mortgage or want to explore your best options, I'm here for you. Check out these videos right here for more insights, and don't forget to like, share, and subscribe. Let me help you build wealth through real estate. See you next time. Bye.